Good evening, ladies and gentlemen. Can you hear me?
Loud and clear.
Awesome, awesome, awesome. I want to wish all of you a pleasant good evening, and I want to welcome you to tonight's session. My name is Ivel Doyle, and I will be your chairperson for this evening. For us at St. Lucia Workers Credit Union, we want to join the rest of the world this month in celebrating Credit Union Month. And for those of you who are not aware, on the 21st of this month, 21st of October, the world, which is our global family, will be celebrating the 73rd anniversary of International Credit Union Month. So we at St. Lucia Workers Credit Union have taken upon ourselves to be able to share with you, our members, our friends, our fellow cooperators in the region and in St. Lucia, a free-part series where we can really, empower, inspire, and educate you to financial freedom or getting to that place where you have desired to be. And the reason being is because this year, the theme for Credit Union Month is building financial health for a brighter tomorrow. So it's quite fitting with our theme this year. So yesterday, we had our first session, which was Turn Your Passion into Cash. I'm not sure if all of you on the call were there, but if you were not there tonight, I'm happy that you were able to make it with us. So tonight, we have our second part of this series, which is securing your financial freedom. So just allow me to, share my screen as we get ready to unveil. Right? So tonight, to do this presentation for us is Mr. Lyndell Halliday. Mr. Halliday is a quintessential son of the Caribbean soil. He's born in St. Kitts, raised in Barbados, educated in Trinidad, and he has also worked in Grenada and has called St. Lucia home for the last 15 years. His first degree is in industrial engineering from the University of the West Indies. He has an ACCA diploma in financial management and an MBA from Durham University. He is also a certified management accountant and holds a project management professional designation. Mr. Halliday has held the position of general manager at Automotive at St. Lucia Limited since 2006, with the company earning numerous awards under his leadership, including St. Lucia Employers Federation, Employer of the Year for 3 consecutive years, St. Lucia Chamber of Commerce Award for Marketing Excellence, Automotive Act Franchise of the Year, 4-time winner. He is passionate about contributing to the community and helping others to develop to their full potential. Previously, he lectured in leadership for the Australia Institute of Business MBA program for 8 years and was a contributor at the St. Lucia Business Focus for 7 years, where he authored the popular must-read column. Mr. Halliday has been on the board of directors of the St. Lucia Workers Credit Union since 2020, having previously served as a secretary on our supervisory committee from 2017 to 2018. He is the founder of Arukuma, he will tell me if I pronounce that right, Advisors, a boutique executive coaching and consulting practice focused on helping smart professionals and entrepreneurs maximizing their full potential and to achieve breakthrough performance while living a balanced and fulfilling life. Mr. Halliday is a proud father of 3, and in his spare time, he enjoys reading, playing chess, meditating, and hiking. Ladies and gentlemen, this evening I present to you Mr. Halliday, and as you can see, he is well qualified, I would say overqualified, to give us this presentation, this lecture, this talk, whatever you may want to call it, this evening. Mr. Halliday, the spotlight is all yours.
Good afternoon, good night, everyone, and thank you very much for that introduction. So, financial freedom, it is a very pertinent topic right now. I'm sure that everyone will agree with everything that has happened over the last 2 years. So I've actually entitled my presentation this evening, A Formula for Financial Freedom. And as we go through, you will get a better understanding of why I'm calling it that. So just allow me to share my screen. Okay. Okay, can everyone see the screen?
Yes, we can.
Okay, excellent. So what I would like to share with you this evening is a formula for financial freedom. So we're going to be talking about money, right? I mean, who needs money? For example, let's talk about dogs. They have no money. They're broke their entire lives. But hey, they manage to get through wagging their tails, looking cute with no money. But for the rest of us, we need money. Most of us, we are not as cute as this little chihuahua. So we need to get some money in order to get by. We have bills to pay, food to buy, houses that we have to buy or rent. So money is an essential part of life. As much as, sometimes people will say that love is what matters and money can't buy everything. I don't think there's anyone that will disagree that you can't get by without money. So let's talk a bit about financial freedom. And just pause and think of financial freedom and what images come to your mind when you think of being free financially. We're going to give you a couple seconds just to mull that through your mind. And I imagine that for many of us, images like this will come to mind. A huge 20-foot boat that we can just sail through the Grenadines with. Huge mansion in Cap Estate or Marigot, maybe. Lamborghini, Mercedes. We tend to think of fancy, extravagant kind of stuff, right? But financial freedom is not necessarily about being filthy rich. It's not about having it all. It's not about being able to retire at 29 and just relax on the beach. Some of us might be able to do that, but for the vast majority of us, realistically, that's not going to happen. So when we talk about financial freedom, what we really mean is having enough savings, investment, and cash on hand to be able to afford a lifestyle that you want for yourself and your family. And I want to emphasize the lifestyle that you want. So in other words, what is financial freedom for me might not be financial freedom for you. We come in different shapes and sizes. I have 3 kids. You might have no kids. One person might come from a dual income household. Another person might be single. One person might have very simple tastes in life. Another person might want to go on fancy vacations every year. So in other words, one size does not fit all. So when we talk about financial freedom, it's important to understand your circumstances, understand your values, understand what is important to you, and have a realistic understanding of what's possible, what is achievable. So you might think, okay, yes, I want to go on fancy vacations 3 times a year. But based on your circumstances, is that realistic? So if that's the case, you might need to go back to the drawing board a bit and change your definition of what financial freedom is. So before we get into the formula, let's deal with some hard, cold facts. So 78% of persons, that's almost 8 in 10, live paycheck to paycheck. Now, these statistics come from the US. Unfortunately, it is very hard to get these kind of stats from the Caribbean, of course, even St. Lucia. But I think you can reasonably extrapolate, and whatever figures you see here is probably a little worse in St. Lucia. So 61% of the population can't afford a $1,000 unexpected expense. And 64% of the population aren't prepared for retirement. Now, when you hear those statistics, those are some cold, hard, sobering facts. So the reality is we all understand the importance of financial freedom, but the vast majority of persons don't have it. They don't know what it means. So I'm hoping that the discussion tonight will put you in a better place so that you can understand in concrete terms some of the steps that you can take in order to get to financial freedom. Now, these are some common sayings that we've all heard. Don't spend more than you earn. Put yourself first, pay yourself first, sorry. Consolidate your debts, maximize your tax savings, start saving early for retirement. So I'm sure we've all heard those in some form or the other. And yet, it's still not that easy. If financial freedom was just to hearing some pithy saying and following it, then we all have financial freedom, right? But hearing it and putting it into practice are 2 different things. As Buju Banton would say, it's not an easy road. So the question is, what makes financial freedom so hard? I mean, when you think about it, it's not that most of us don't know the things, a lot of the things that we need to be doing. But still, you will find that persons are running into all kinds of financial trouble, running to financial institutions to pay 30% interest rate for small unexpected expenses. Most persons, if they're laid off from a job, they are in no position to pay the expenses for even the next month. And so I think a lot of the challenge is, it's not that we don't know the right things to do, is that it comes down to human behavior. And unless we tackle the issue of human behavior, we're not going to be able to get to financial freedom. So what do I mean by that? Well, simply that we are creatures of habit. So much of what we do is automated. We do things without thinking it through. We get up in the morning, we have a certain routine, we go out, we stop for coffee, maybe you get, maybe you have a hard day at work, you go out and have a few drinks. A lot of what we do is just automatic. We do it without thinking about it, right? So part of the formula for success is understanding these habits, trying to reverse them, and replacing them with good habits. So, in essence, the formula is this: tools. So having the right tools, having good habits, and accountability equals success. So we're going to talk about all three of these things this evening. I'm going to talk about some of the tools, many of which you've probably heard already. But I'm also going to talk about how you can go about developing the right habits. And thirdly, I'm going to talk a little bit about accountability. You put these three together, then you have this formula for financial success. So let's talk about the tools. So there are 5 key elements in a financial plan that I want to talk about. First of all, clear financial goals. You have to know what's important to you, what you're trying to achieve. Secondly, budgeting and expense tracking. Thirdly, rainy day planning and retirement planning. Fourthly, estate planning. And lastly, avoiding the debt trap. All right, so first of all, understand your goals, understand what you're trying to achieve, understand what's important to you. Not just in the short term, but also in the medium term, in the long term. Do you have kids who may want to go away for college? So it is easy for most of us to just be transfixed on the here and now. What do we need to do next month? What are the bills to pay? But we also have to take in consideration those medium-term and long-term goals and be planning for those. So when it comes to budgeting, one of the most widely recommended rules is what we call the 50-20-30 rules. So in other words, you take your after-tax income. So whatever you have after the NIS and taxes have been deducted. Ideally, you want to budget so that you're not spending more of 50% of that income on the essentials. So essentials, you gotta live somewhere. So your rent or your mortgage, you have to eat, you have to pay utilities. If you're driving, you have to have gas in your vehicle. So ideally, you want to try and keep that in the 50% range. You may not be there, but it is something that you want to aspire to. The challenge that happens is, for most of us, is that we start off with one income, and our income grows, and we start spending more as well. So we're eating fancier food, we rent a bigger apartment, we get a bigger car, and so forth. So if that's the mindset where as soon as your income grows, you increase your level of essential spending, then you're never going to be able to get within that formula, right? Discretionary expenses are things like clothing, dining out, entertainment, going on a date, travel, that kind of stuff. So you want to try and keep that within a 30% range. And at a minimum, we want to put aside 20% of our income for future expenses. So we're talking about savings, retirement plan, budget plan, pension plan, credit cards, making sure you pay those down, insurance, whether we're talking about health insurance, house insurance, that kind of stuff, right? So this is what if you aspire to this, then even though things might be a bit challenging, over the long term, particularly as your income grows, as your savings grow, you're going to see your financial position improve significantly. So the important thing to remember about this is that Rome was not built in a day, but you got to start somewhere. So a few budgeting tips. One, calculate all of your expenses several months in advance. So for instance, you know that August is back to school. Maybe you have 3 kids, you have to buy books, you have to buy uniforms, all of that. You know that every year you're going to need about $3,000 of back to school expenses. So you don't want to wait until July and then, oh my gosh, where am I going to get that $3,000 from? And then you have to run somewhere and find a loan or beg or so forth. No, you plan several months in advance. You know, August, you're going to need that $3,000. So month by month, you put aside a little by little so that when that time comes around, you have already planned for and you're prepared for it. In terms of keeping track of your budget, then like personally for me, I use Excel spreadsheet. I find it a lot easier to use, can put in formula and so forth. Not everyone is comfortable with Excel, and not everyone may have access to a computer. So there are quite a lot of free apps, whether you're talking about in the Apple Store or the Google Store. So you can do a search budgeting, expense tracking apps, and quite a few will come up. And maybe download like 3 or 4, or maybe not so many, try them, see which one you're comfortable with, because what I like, you might not like. So your comfort level will be different. So the app might be an easier solution because everyone has a phone on them all the time, right? And the ideal thing is to try and get an app that allows you not only to do budgeting, but to track your expenses. So budgeting and expense tracking go hand in hand. There's no point at the beginning of the month you spend all this time coming up with some perfect budget and then you're not adhering to it. If you get into the habit of tracking your expenses by putting in those expenses into that expense tracking app at the end of every day, then you're going to have a better idea of how realistic your budget is. And 2 things may happen. Maybe you need to change your budget, or maybe you're just spending too much. And maybe you need to cut back on your expenses, right? So that feedback, that accountability to yourself is going to be crucial. Okay, let's talk about tax. So tax evasion is against the law. Tax avoidance is not against the law. And what we mean by tax avoidance is that there are many, many legal ways to reduce the amount of taxes that you are paying. So, for example, you can save up to $5,000 in your credit union every year. That's tax-free. So, retirement pension plans up to $8,000 a year, or up to a maximum of 10% of your income. Life insurance, national insurance, the 2 of them added together can up to $8,000 per year. Repairs and maintenance of your home up to $10,000. I meet people quite often who are utilizing some of these things, but are yet not taking advantage of the tax savings. For instance, up to last week, I was talking to someone who was spending money repairing his home and had no idea that he could claim money back from his taxes for a certain amount on your home. So at the end of this presentation, I'm going to share a link to the Inland Revenue website, where it has a link of all of the list of all the different ways that you can claim, you can reduce your income tax expenditure. Right? Rainy day planning. As much as we may want to be optimists and we might want to hope for the best every day, the reality is we know that rainy days will come. This pandemic over the last 2 years has taught us that we have to expect the unexpected. So we cannot just be budgeting and assuming that our income, our expenditure is going to stay the same. There may be times when you may lose a job, as we will have seen, unfortunately, last year for many persons in St. Lucia. Or you may be forced to take a pay cut. Then there's things that can go wrong. There are hurricanes. We're in a disaster-prone area. Just next door to us recently, we saw the effects of the eruption of a volcano. And it didn't just affect St. Vincent, it had devastating consequences in Barbados as well with the ashfall. So we have to understand that we live in a world that is very uncertain, and we have to put things in place to plan for those uncertainties. So a few key things are: one, building up an emergency fund. The recommendation, you normally want to have 3 to 6 months living expenses. So if you're not there, you start. It's going to take some time to build up to that amount, right? It helps if you automate your savings. The discipline to save money takes a lot. We can be impulsive at times. And you may say, well, I'm going to save $200, but you don't save it. So automate your savings. Say, well, you go to your employer and you have a deduction. Okay, every month, $200 is going to come out of my paycheck, is going to go straight to my credit union savings account. You want it to go to an account that you're not going to be using for your day-to-day spending. That way, you're not going to be as tempted to touch it, right? Insurance. So we're talking about things like health insurance, so that if something happens to you, something happens to your kids or your spouse, then you're covered. You don't need to go and have car washes to raise money, right? House insurance, if you own your own house. If you're renting, home contents insurance. And that is actually one of the cheaper forms of insurance. You can get insurance to cover the contents of your home, even if you don't own that home, so that in the event of a fire or natural other disaster, you don't have to start from scratch. For car insurance, if you can get it, comprehensive car insurance is better to have. A lot of persons, once the loan is paid off, they cut the insurance down to third party. But then what happens if you get in an accident and you can't afford to replace your own vehicle? So that's important as well. Okay, we're going to talk about retirement planning. I know that we have a lot of self-employed persons within the membership of the credit union. And we have a lot of those persons who are not enrolled in national insurance. Not being enrolled in national insurance means that if you're sick, you get no benefits. When you're ready to retire, you get no benefits. So if you're self-employed, please enroll yourself in national insurance so that you can have that extra bit of coverage. But whether you're self-employed or whether you're employed for someone, it is very important that we don't rely solely on national insurance. For most persons, the lifestyle that you live now, you're not going to be able to maintain that kind of lifestyle by just relying on national insurance pension. So you want to have other means. Don't put all your eggs in one basket. So there are options in terms of registered retirement savings plans, annuities, endowment plans. There are quite a range of options if you talk to financial institutions. And not to mention, again, your credit union, because you're up to $5,000 per year. can be saved tax-free. So the important thing, I think, is you don't want to just have one or two sources. Ideally, you want to have a little bit in different baskets. I'm sure many of us will remember what happened to CLICO, right? So even though even though regulation has improved since that time, it is still better to have some kind of diversification. Lastly, understand the power of compounding interest. So in other words, the earlier you start to save or invest, the more you end up with, because the interest on your investment earns interest, and that interest earns interest. So you have a multiplier effect. So you end up far better off if you start early than if you start much later in life. Next, we're going to talk about estate planning. And this is not something that most of us want to think about. Nobody wants to think about death or serious injury or something happening to them. But as much as we don't want to think about it, it's important that we think about our loved ones and we think about the effect that if something unfortunate were to happen to us, the effect that it would have on our loved ones. So in a financial plan, you have to take that into consideration. So a few things to think about. Insurance on terms of your loans, like for instance, there's the Advanced Protector Plan, which is offered through the credit union. It gives you protection. In the event that something unfortunate happens, that your loan, it protects your loan payments. Family indemnity plan is another option, that if something unfortunate happened to your loved one, then you don't have to be scrambling for funeral expenses. Life insurance. Again, if you have persons who are dependent on you, you have children, you have a spouse, you want to make sure that if something happens to you, that they will be taken care of. And lastly, do you have a will? If you don't, then you may want to have a conversation with a lawyer about drafting a will. I think all of us in St. Lucia are familiar with stories where there are messy probate issues and just how uncomfortable it can be for the surviving family when those things aren't clear. Okay, so lastly, let's talk about the debt trap. This is a trap that is so easy to fall into. It is very insidious. It happens without you seeing it. Borrow a little bit there, a little bit there, a little bit there, and very soon it can become overwhelming. So regardless of what your circumstances are, it is important to just stop and have a clear understanding of your financial position. So in other words, let's do a net worth statement. By that, make a list of all your assets, everything that you own that has value. Next, make a list of everything and everyone that you owe and compare the two. I find this is a very useful exercise because we don't really think about this. We think about, okay, well, I'm paying $120 a month on this, or I'm paying $50-something a month on this. But we don't think about the interest rate and that's added to the principal and how much we owe overall compared to how much we own. So I find this is a very useful and sobering exercise in terms of helping you to understand where you are and giving you that push that you need in order to take the steps to get out of that position. If you have credit cards, don't just pay the minimum payment. try and pay them off as soon as possible, right? The sooner you pay them off, the more you save in interest. And lastly, look at the possibility of a debt consolidation. Go to your financial institution, go to your credit union, have all your receipts, all your bill payments, and say, okay, help me, right? And sometimes, depending on your situation, maybe you might be a little bit embarrassed because you feel like, oh boy, I should not have gotten myself in this situation. Don't let that stop you. That's what financial institutions are there for. So rather than paying 4 or 5 payments with interest rates going up to 20-something%, you might be able to get a plan where you're paying a single payment with an interest rate that's much lower. And 2 things will happen. 2 things. One, you may have less, you may have better cash flow because you have less payments to pay every month. And then you're going to save money overall by paying less in interest. Okay, so I'm going to move on now to talk about habits. So we talked about some of the tools that we need in order to attain financial freedom. What about the human behavior part? What about the habits? So what I'm recommending for this is a framework called the WHOOP framework, which was developed by a German academic and psychologist. The good thing about this framework is that it's backed up by 20 years of scientific research, right? So there are 4 aspects of the WHOOP framework. W, which stands for wish. O stands for outcome. O, second O, for obstacle. And the P is for plan. Now this is a framework that can be used in all kinds of goal setting. It's not something specific for financial planning. But I'm going to show you how you can apply it to your financial planning. And at the end of the presentation, I will share a link with a download link with a template that you can save and print out and you can have for your own use as well. So the idea of this framework is we want to go from dream to reality. So it's aspirational. We want to understand what is our vision, what is it that we want to achieve. But at the same time, we need to take a cold, hard look at the reality so that we can make a plan to deal with that reality in order to achieve our dream. So let's start with a wish. And I'm going to invite you to do a short exercise here. You'll get the framework and you can spend some more time doing this in your own time. But for now, just close your eyes for a few minutes. And identify a wish, something that you desire financially. And when you're thinking about this wish, I want you to think of something that's not necessarily constrained. Don't just think of your current circumstances and be constrained by them. So you want to think of something that's challenging, but at the same time, it's possible. It's attainable. So, for instance, you're not going to think, you may not want to think about owning 10 houses in the next 3 years, because that's just not realistic. But maybe you have a dream of owning your house in the next 5 years. And maybe you can't quite see how it's going to be possible right now, but at the same time, it's not impossible. Now visualize yourself having achieved this wish. And when you have your template, you're actually going to write it down. describe what that wish is, describe what your vision is, having achieved that. Next, we're going to talk about the outcome. So think of the best possible outcome once you have achieved this wish. And I want you to think in clear, precise terms. What benefits have you realized? For instance, if your dream was owning your own house, maybe the benefits are finally you have a place that really caters to the needs of your family. Finally, you have a real financial asset that you can call your own. Finally, you get to live in that desirable area that you've always wanted to live in. But also think about the emotions. What emotions come to mind? How do you feel when you visualize yourself having achieved this? Maybe you feel relieved. Maybe you feel excited. Maybe you feel triumphant. So for everybody, the emotions may be different based on whatever it is that you've visualized. Now, when you're doing this actual exercise, then you're going to write all of that down as well. Okay, you can open your eyes now. We're going to talk next about the second O, which is the obstacles. So you know what your wish is. You know how it's going to feel to achieve this. But what can go wrong? And the important thing about this is very often we have all these great plans and goals and so forth, and we get all excited and we say we're going to do this, and then we hit a stumbling block that we hadn't anticipated. So what makes this plan so effective is that you're thinking ahead of the possible things that can go wrong. So you're going to look deep inside of yourself. Understand who you are, reflect on who you are. What are the things that would throw you off? What are the mistakes that you know that you would typically make? Or what are the things that can go wrong just due to circumstances, maybe no fault of your own? So, for instance, maybe you know that you make impulsive purchases, particularly when you get stressed or emotional. So, you know, that's one obstacle. So you write that down. Or maybe you know that you eat a lot of KFC and Domino's because you don't have time to cook. So that's one possible obstacle. So write that down, the lack of time to cook. Right? So whatever you can think of that's associated with a particular wish, make a comprehensive list and rank everything in order of most likely and most important. So in the final step, this is where we're going to talk about a plan. And specifically, we're going to go at if and plan. So if this happens, then what? What am I going to do? So for instance, we were talking about maybe you know that you have a tendency to make impulsive payments. So, all right, so, okay, you know, when I'm stressed, I make impulsive payments. I go on my computer, I go on Amazon.com and I see things that I like and I order it, and next thing you know, I spend $200 and I don't know what happened. Okay, so what are you going to do when that happens? So maybe your plan is, okay, when that happens, instead of doing purchase, I'm going to put this in my cart and it's going to stay in my cart for at least 48 hours before I decide to buy. And what you might find may happen is that, okay, when you do that, you go back at the next day and you're like, boy, do I really need that, boy? I could really use that money somewhere else, you know. Delete, right? Or Another example we talked about, you don't have time to cook. So you spend a lot of time on fast food or buying other things, right? So what can you do? So, all right, what I'm going to do is I'm going to put aside time every weekend to do meal prep. So maybe I'm going to peel some potatoes, maybe I'm going to cut up some vegetables, and I'm going to season all my meat and put them off in parcels in the freezer. And maybe you cook for the week, or maybe you just do meal prep so that it's easier. So instead of taking an hour and a half to cook, it's just going to take you an hour. It's just going to take you half hour when you're ready to cook in the week. So then it becomes less of a burden. You're less likely to say you don't have time to cook and just rush out the house and end up spending $15, $20 on fast food, which might seem like a little bit, but over time it would add up. All right, so you're going to repeat this exercise for everything in your plan, every obstacle that you have identified. So, and if this happens, then you have a plan. So the advantage of this now is that when you actually start to put everything into practice, you know already what you're going to do when something goes wrong. So in essence, that is the WHOOP plan. And again, I will share the download template with you in the chat at the end of the presentation, so you can print it out and use it. The final part of the formula is accountability. So we have the tools. We have a framework that will help us to develop and put the right habits into practice. Now we have accountability. So what we have here is a little action plan that will help us to keep ourselves accountable, both to ourselves, but also we can also involve someone else to help to keep us accountable. So after you've gone through everything, you're going to come up with a series of actions. These are the things I'm going to do. So maybe I'm going to track my expenses every day. So you have for every action, you have a start date, a completion date. In some cases, there may not be a completion date. Because, for instance, if you say you're going to track your expenses every day, there's no completion date. That's something you're going to do every day. When you say, okay, well, I'm going to make a list of all my assets and debts, then you may say, okay, I'm going to, then you may have, that's something that has a start and finish, right? This fourth column is, who am I going to tell? The reason for this is that it helps to keep you accountable. If you say, well, I'm going to track my expenses every day, you know, that's not an easy habit to just go and start doing. You might do it 1 or 2 days, but then you might fall off. So have an accountability partner. So could be your spouse, could be or your significant other, it could be a relative, it could be a close friend. And the person who you tell may be the same for every action, or depending on what it is and how sensitive it is, you may be a different person, right? But having and committing to tell someone about your action will dramatically increase the chances that you will do it. Because that person is going to come to you and say, you know, Linda, how is your expense tracking going? And yeah, you can feel a little bad saying, well, you know, I haven't really done that for the last 3 days, you know. So the fact that you know that person is going to ask, yeah, and it's going to help you to be a lot more consistent in it. Lastly, how would I measure my success? And this is part of you being accountable to yourself. So have a measure of success. So for instance, if you're talking about meal prep, maybe your measure of success is how much money you save from not eating out, for instance, right? So the importance of this is that when you can see these signs of success, it gives you that encouragement, it gives you that inspiration. You feel, you know what? This is really working. I should keep going. Right? So there we have it. Tools plus habit plus accountability equals success. So that is the financial success formula. And I can't promise you it's going to be easy. Changing habits is difficult. But one of my favorite quotes from Jerry Rice says, "Today I will do what others won't, so tomorrow I can do what others can't." So, hey, make the sacrifice now, put in the hard work now, do the difficult things now, and you will reap the rewards later. So that's it. So thank you very much for listening, and I guess we'll open to questions.
Wow. Thank you so much, Mr. Halliday. I don't know about you, but I took so many things down, so many tips. I've learned so much today. And I want to say thank you for that. At this time, it is your opportunity to ask Mr. Halliday your questions. Let me just activate the allow participants to unmute. Oh, it's actually done already. So you can go ahead, raise your hands, ask your question. The floor is open. Okay, I don't see. Yes, great. I see others were taking notes. Like myself, that's very good. We have some comments in the chat. I don't see any questions, but Marva said, great advice. Urban said, awesome. I was also taking notes. Kudos to you, Urban. The links have been placed in the chat for us. So you can go ahead, copy it, save it onto your device. So Mr. Halliday, that means that you did such an excellent job. We have no question. Oh, I spoke too quickly. Vanessa, you can go ahead and unmute on your end.
Thank you so much. I just wanted to ask some more on the topic of debt consolidation and that feeling of embarrassment. I know that many of us, when we look at sometimes maybe our credit card bills, and this is the third, fourth, fifth time that we're consolidating again, that it could make us, feel like we're really stuck in a rut. So it's like two-part question, which is one, how do you prevent yourself from falling back into that rut? And what are your tips for like pushing yourself to going to your financial institution to say, here I am again, because I find that can be extremely difficult.
Okay, thanks for that question. So two things. One, I think this formula will help if you're able to get out of that situation. Once you get out of that situation, this formula will help prevent the chances of you getting back in that situation. Because we're not just going to be, the beauty of this formula is not just giving you tools, it's helping you to ingrain healthy habits, and adding that accountability aspect to it means that you're less likely to fall back into that trap. But in terms of dealing with the fear of going to the bank or financial institution, I think what's important to remember is that you are a customer. Financial institutions don't make money unless they give loans. So when you go to a financial institution to consolidate your debt, for that financial institution, it's an opportunity to gain revenue that they would not have had in the first place. So you're not going in shaking in your boots like, you know, man, what are they going to think of me or whatever. You're going in presenting yourself as a possible customer to that financial institution. And you go with that confidence, knowing that, okay, well, they would like to make some money off of me, so I'm giving them that opportunity. So think of it that way rather than think of yourself going in as a beggar. So I hope that helps.
Good night, everybody. Are you hearing me?
Yes, we can hear you. Go ahead.
Okay. That discussion tonight was very interesting, but something he said, and I remembered I did it, when he made the statement that you could ask your employer or the bank to deduct a certain amount of money from your salary and put it on another account. I have experienced that in, I think, two areas, and it worked very well for me. The first one, I was putting as little as $50 because I had a plan for it. So I said, I'm going to do it that way. Maybe by then, when I'm ready, it may have a few thousands. And it worked for me very well. That when I was building my home, I was able to buy every single window from that savings. And it worked so well for me that I was encouraging persons that find it really hard to save. I used to tell them, you don't have to put a few hundreds aside. If it's 50, you can do it. If it's 100 or if it's 20, do it. It will grow. And I'm even looking at my own son's account that I opened for him at that institution. And I started very small, and I was surprised to see how well it grew and what amount he has on that account. So I think if we are dedicated in doing it, it can work for us so well. And I was happy to hear you say that. And I think a lot of people should take on that statement. You cannot put too much, but if you put 50 or 100, whatever that is affordable, and you make sure you put it in an account that you do not want to touch, you have no ATM card, it will build up, it will grow. Okay, that's what I wanted to say. But I learned a lot from that tonight.
Yeah, thank you for sharing that. The thing is, if we have access to $1,000, our habit is we spend $1,000. We have access to 2,000.
Yes.
So by having a
important.
forced savings, you force yourself to spend less very often.
Yes, yeah. And I had a goal. I was doing it because I had a goal down the line. And like I said, it worked very well for me. Very well.
Great. Thank you so much for your comments. We have one hands being raised, Mr. Halliday, and then we'll take this question, and then I have a question from the chat. Mr. Jackson, Terry Jackson, you can go ahead.
Yes, I have a question for the chairperson. I'm so happy and pleased that I was able to get your mail as usual. And I don't know, I was really looking forward to listen to that session yesterday, and it slipped me off completely. And I'm so happy I remember it. And I have a question for you. I am planning to start saving something, no matter how small it is, to build. One of my obstacles is trying to help my kids since the COVID, and they lost their job. So happy that one of them pick up, they go to work, and I have to be helping them. It's holding me back. But my question is that I am overseas. Do I have to send the documents for you guys to tell you my address and stuff like that? I want to know if I can buy a house and do the transaction as I am overseas. And I could have one of my kids who is in the credit union to be my right hand. So please let me know, because I have some cash I am willing to send down, hopefully by next year, if God willing. Hopefully it should be a substantial amount, which would give me a good foundation for my down payment. So is it possible that I can buy a house whilst I am here and do the necessary transaction paperwork if you all? Either it has to be sent via FedEx or USPS or UPS, and I could do all the signing and stuff like that. So let me know so I could know if I can continue focusing on sending as much as I can to the credit union for that purpose. Thank you.
Thank you for this question, Mr. Jackson. So if I understand you correctly, you're saying, well, basically, can you take a loan with us while you are overseas, right? To purchase a house. I think that's correct. And the answer is yes, you can do that. So you can process everything while you are away. And we also have the means where you can actually, we have technology now with email, it can be sent by email as well, with everything being notarized. So yes, we can accommodate you when it comes to that. Did that answer your question?
Yes, I am so pleased to hear that, because I'm really, really looking forward, because I've been encouraging my kids. From day one, I've been telling them, try your best to save. I open that account for y'all. Try your best to save from that, concentrate on saving at the credit union rather than the bank. You could have a second nest of putting your money at the bank, but put most of your savings at the credit union, because it is more beneficial to you, because the credit union works more in our interest than the bank. So I right now focusing seriously. And please, I have been asking for that I have been emailing you guys a number of times. Please send me the bank transfer information. Normally I would send money down for my kids to bank for me. I want to start sending some substantial amount of money, but I want to send it through wire transfer. So please, if you could text me the wire transfer information. I've asked you that for a number of times.
Okay, Mr. Jackson, I'm going to take care of your issue as the accountant of the credit union. Can you private message me your email address, and you will get that information in your inbox? All right. Also, you can send me your WhatsApp number if you wish as well.
All right, I will do that. And what's your information first, so I could email you that? I remember you very well at that credit union, when I was at Cable and Wireless.
Can you private message me your email address, and I will send you everything. You can put your number there as well, so I can connect with you directly and to answer your questions and provide you with all your information.
Okay, I will do that. Okay, yeah, and I forgot your name. What's your name again?
My name is Ivel Doyle.
You look as if the one I knew from times at the credit union when I was Cable and Wireless. Topics, all these guys were there.
No, I'm not the one.
Oh, you're not the one.
Yes.
Right,
okay.
Okay.
Thank you so much for your question. We would serve you, but the best way we know how to. So just send me this information, and I'll provide you whatever you're looking for.
Yeah, I'll have to send you. I'll have to fill in the form for the change.
We will guide you.
Yes, thank you very much. Appreciate that.
Yes, you're most welcome.
A very wonderful session. I really enjoyed it, and I really, really learned a lot. And what he said, a lot of what he's saying that I've already start working on that. Thank you.
Awesome. Thank you so much for your contribution. At this time, we have, let me just go through the question, Mr. Halliday. Question for you. In regards to estate planning and the establishment of will, does the Inland Revenue Department imposes an inheritance tax on persons who inherit property upon death of the testator? Just curious. The person is just curious to know.
Yeah, I have to say that is not my area of expertise. So I don't know. Check with the Inland Revenue or check with a, in any case, you will need to consult an attorney if for proper drafting of a will.
Okay.
Ms. Doyle, maybe we may have a legal mind on the call. I don't know if the legal mind would like to chime in here and just probably take a stab at that question for the individual.
I think that's an excellent suggestion. So if you are legal expertise, you can go ahead, unmute, and we would love to hear your comment on this question.
I don't want to call out the name of the legal person.
I would have called out the
would
name, so it's a good thing I don't know the person. I would have put the person on the spot.
Yeah.
Okay, maybe he or she is a little shy, so we understand. I will continue the comments and questions.
Hold on. No, hold on.
Okay.
The legal mind is trying to get on, but the host is not allowing him to unmute.
Okay.
So
can you go
we
ahead and
unmute him?
unmute since you know who the legal mind is? You can unmute on your end. Yes, can you assist me with that, please?
Okay. I am asking to unmute, but he's not unmuting.
Okay.
Mr. Ravino, can you try again, please, to unmute yourself?
Good evening, I'm on.
Okay, great.
I'm on now. Is everyone hearing me?
Yes.
we are.
I assume, Charmaine, that by legal mind you were referring to me because
Yes,
I'm not
I was,
sure.
Ramon.
I'm not sure which other brilliant minds may be on the call, but just to sort out, I'm not sure who it is who asked the question. There is no inheritance tax in St. Lucia. That was removed quite some time ago by rich parliamentarians who themselves did not want to have to pay succession duties. So fortunately, you can inherit millions in St. Lucia, not be subjected to succession duties. Okay? Does that cover it?
Yes, I think you covered it.
All right.
I will wait for a comment from the person who asked the question to see if that did. Thank you so much for this. I'm so happy that you are on the call tonight, that you can assist us with that aspect. Thanks again.
Pleasure. Thank you for having me. Okay.
You're most
Good night.
welcome. I think I have just a few comments. This was a great session. I learned a lot. I did take notes, but not all I wanted because it spoke faster than I can write. So I'm happy I came on. Mr. Halliday, somebody was asking earlier on whether the presentation will be made available.
Yeah, sure, I can do that. Not sure what's the best way to do that, but I can do
The
that.
person can reach out, just put the email address, send it directly to myself, and then we would email it across.
Okay.
Yeah.
If Mr. Halliday could put it in the chat the same way he had put the link.
Oh, yes, yes, and it can be
download
downloaded.
it, because many other persons may probably want it themselves.
Yes.
Okay. Let me do
Great.
that then.
Question for you, Mr. Halliday. What is compounding interest?
Right, so compounding interest. So in essence, if I save $100 and I get 10% interest that year, then at the end of the year, I would have $110 in savings. Now, if that 10% interest continues, then I will earn 10% of the 110, which is $11. So whereas I would have earned $10 in year one, in year two, I will earn not $10, but $11. And as you can see, as the amount grows, the base on which the interest is calculated is going to grow. So the earlier you start investing or saving, the more time you have to take advantage of that compounding effect. Does that help?
I think so. It would have. Thank you so much for that. We have a few more questions. Is it better to do investment with the credit union than at a commercial bank?
Well, so so the credit union is a number of things. One, the credit union is a member-owned organization, right? The bank is owned by private shareholders. So when you are invested in a credit union, you are invested in yourself. Secondly, you have the advantage of the tax savings. That is a fairly unique carve-out that a lot of governments have created in order to encourage persons to invest in cooperative organizations. So if you save $5,000 in the bank, at the end of the year, what do you get? Banks are not even paying interest these days. If you save $5,000 on the credit union, even if the credit union had a bad year and can't pay you interest, then you get the benefit of the tax savings. So if you are at the top of the income bracket, that immediately means that you're going to be saving $1,500 in taxes if you're at the 30% bracket. Or even so, even if you're not at the top of the bracket, you're going to be saving something in taxes, right? And lastly, remember that it is a member organization, so you have a voice in the credit union. You get to elect volunteers, so you have a voice in the decision-making, in the policy, in the direction of the organization. So the answer to your question is a resounding yes, the credit union is better for you.
Thank you so much for that. Mrs. St. Remy, would you like to add anything to that?
Yes, I would just like to add two other areas of benefits with investing in the credit union that you will not get at any other financial institution. One of them is dividends. Mr. Halliday mentioned that you are an owner of the credit union. That means you have purchased shares at the credit union. That makes you an owner, part owner of the credit union. On that investment that you have made on what we call your permanent shares, at the end of the financial year, once the credit union has done well, you get something called dividends on your shares. Okay, that you do not get at any other financial institution. Secondly, on lending, we also pay something called patronage refund. So I know Mr. Halliday spoke a lot about interest rates and persons are speaking about interest rates. In as much as, let's say the credit union charge you, let's say 7% on a loan, 7% interest rate on a loan. If the credit union does well, and when I say if the credit union does well, every member who invests and every member who takes a loan within the credit union are the ones who determine whether or not the credit union does well. So in a year where the credit union does well, what could happen is that you could get back part of the interest that you paid on your loan. That's crazy. That is crazy thinking, but that's what credit unions are about. So you may have paid 7% interest. The credit union did well because you paid your loan. Everybody who took loans are paying their loans, so we're getting the interest in. And then the credit union can decide we're paying 5% patronage refund, 4% patronage refund. What does that mean for you? That means for that year, you would have paid, if it was 7 and you get back 4%, that means you paid 3% interest for that year because you're getting back a 4%. So on the value. So then that means you are gaining even more after benefiting from the lending that you obtain. So the credit union movement is for the member. And it is not, that is why it is a not-for-profit organization. We make a surplus, which is then given back to the member after we have met all our statutory regulation and commitments. So just to add to what Mr. Halliday said, yes, it is better for you to invest with the credit union than with a bank if you're looking for returns from various aspects of your investment at a financial institution.
Thank you so much, Mrs. Remy, for adding that for us. I have one more question in the chat and we have 2 hands being raised. So I will do the question in the chat and then we'll go ahead to the 2 persons. So question to you is, Mr. Halliday, you mentioned that one can claim money spent on repairs to their homes when filing taxes. However, I am told that only persons with mortgages qualify. Is that really the case?
Yeah.
Okay, that's a good question. That's the first time I heard that. My understanding was that once you own the home, you're entitled to claim repairs and maintenance. So did you hear that from the Inland Revenue Department? What I would encourage the person who posed the question to is double check with the Inland Revenue Department rather than going on with a secondary source.
Yes. Thank you for that, Mr. Halliday. Yes, the person said yes, an officer who helped file the taxes said so.
Okay, well, thanks. I was not aware of that.
I'm not either, Mr. Halliday. That's the first I'm hearing. To me, once you own the property, then you should be able to, but that's new. Maybe something we're learning now, but I'm not aware.
Okay.
Thank you for that. I think we'll have to do our own research on this one by contacting Inland Revenue. Mr. Jackson, you can go ahead and ask your question and then we will have Mr. Lewis. Go ahead, Mr. Jackson, you can unmute on your end.
Yes, I did that. I would like to find out if the monies owned by the members are insured. So in case something happens, that they do not lose their money. That's one. And I also want to let you know that I put my information online there for you. So if you could take a note of it so that we could get in contact so I can get some information from you. Thank you.
You can go
Okay,
ahead.
Mr. Jackson, I'm glad you asked that question because that's another benefit with the credit union, which a lot of the times we do not highlight, but we should. The credit union takes out an insurance on your loan and on your savings called the LPLS, Loan Protection and Life Saving Protection Insurance. That is, and the cost is borne by the credit union on your behalf. So your savings are secure. every credit union will have, they will choose a limit on the savings value or on the lending value based on the portfolio that they have. So yes, your savings are secured. It is covered via insurance that we pay for you through a company called CUNA Insurance. I hope that answers your question.
Mr. Jackson, did we answer your question? And thank you. I got your information. I took it down, so I would send you the requested information. Mr. Lewis, you can go ahead.
Hello, good night, all. Pleasant good evening, one and all. Thank you very much, Mr. Halliday, for your insightful presentation. Is everybody hearing me?
Yes, we can hear you, Mr. Lewis.
We're hearing you. Thank you.
Okay.
Thanks.
Yes, I wanted to say a special thank you to Mr. Halliday for his insightful presentation, and he covered a range of very important aspects. When we talk about the organization, I would like us to always use the word we. And I know maybe some of you are not members of our credit union, but I suspect you will soon be. So I am being rather optimistic and bold here and make a statement that we are well placed to do quite a bit. Our manager, Mrs. Senremi, was very modest in terms of the benefits. And she spoke of CUNA. And I wanted to speak about CUNA because CUNA is a specialized insurance agency catered to credit unions. And one of the things that has turned out to be a lifesaver in St. Lucia, kid you not, is a plan called a Family Indemnity Plan, which only credit unions carry. And that plan is a death benefit program, which allows, upon the death of a family member who's insured with the program, that instantaneously, once you have contacted your credit union, you will receive the assured amount, which would go towards things like funeral expenses and whether or not there are any other liabilities that the person left or debts or anything like that. And that has been so substantial in times of bereavement and grief for so many families. And that is a service that is unique to credit unions. And St. Lucia Workers Credit Union carries that policy through our relationship with CUNA. Another important thing, and people ask about financial institutions, one would think that you would hear the banks in St. Lucia generally have about 10, 15, 20, 25 scholarships a year. But you hear continually credit unions like ours, but in particular, since we're talking about workers, we're talking about our credit union, has consistently, annually given scholarships to the children of our members based on their performance in the common entrance exam. And even recently, more recently, we have this year started with regards to Sir Arthur Lewis Community College. And these are all added benefits being a member of the credit union. So imagine, let me paint you a scenario. You have a mortgage with St. Lucia Workers Credit Union. You have two children who have the kids account, which we have. We have a special term for it. So Miss Thing will help me with that. Miss Doyle will say the name of it. But we have a kids account program. And let us assume that there is no COVID and we have a normal year. And one of your kids are in grade 6 and is about to do common entrance. Here's the beautiful thing with Workers Credit Union. So we had a good year the past year. We had AGM. You were paid interest on your savings, right? Twice for the year, because we pay that every 6 months. And then we got a profit. So then you were paid dividends on your investment. Then you have a mortgage, you got patronage refund. Then we have the kids summer program, of which your kids are free to participate should you register them. Then further to that, you also had your child did well in common entrance and you applied for a scholarship and your child received a scholarship for 5 years. Isn't that a beautiful combination to be part of an organization where you have that kind of access? Then further to that, even with COVID, here we are having a conversation on how we can manage our finances towards reaching some kind of financial freedom. The gentleman who did the presentation is well qualified and certified, and a practitioner who holds management level experience and sits on the management of the organization and is sharing, not because we're paying him, but because that is part of his volunteerism. And so now we can pass on to our children the spirit of volunteerism and be part of an organization which is building not just our lives, but all of us collectively and St. Lucia by extension. And that's in essence, Genco people, is what St. Lucia Workers Credit Union is about. We are a story about development, and just like managing your financial resources and ensuring you have for a rainy day, the credit union itself has to do the same thing in managing members' money, catering for a rainy day, adjust to the climate, adjust to the needs of the environment and so forth. So that's why we change location, right? That's how we change our products. That's why we have gone online. All efforts geared at ensuring that we improve what it is we put forward for the membership. I thank you.
Thank you so much, Mr. Lewis, for that. The account is called Workers Young Dreamers Account. That's the account for our children from ages 1 to 16. And also to add on to that, Mr. Lewis, during summertime, we normally partner with various organizations to be able to give parents a discount when you go buy your books for your children, uniform for your children. So that's an added benefit to those who are members and the children are part of that account. Let me see if we have any more questions in the chat. Okay, we have a question. Is it only members' children who can get a scholarship? That's correct, yes. You have to be a member of St. Lucia Workers Credit Union to apply for the scholarship for your child. Ah, Mrs. St. Remy answered it in the chat, I see that. Thank you so much. I think this is all for our questions. So at this time, she doesn't know that, but she's right there with us. I will call our General Manager, Mrs. St. Remy, to give her final remarks, and then we will close the call. You're muted.
Yes, I was. Thank you, Ms. Doyle. And most of all, thank you, Mr. Halliday, for such an in-depth and very insightful presentation. You spoke of something very important that I took a note of when you gave the formula for success in financial, securing your financial freedom. You said tools plus habits plus accountability. And I just wanted to say a little on habits and accountability, because habits have a lot to do with our mindset. It has a lot to do with our attitudes. If we are not prepared to change our mindset, if we're not prepared to change our attitudes to our finances, everything Mr. Halliday said there today will not make any sense. It will not benefit you. It will not change the trajectory of your life. You must be prepared, however difficult it may seem, no matter how difficult to swallow some of the things that he said that we have to do, some of the habits we have to break. If we're not prepared to make that sacrifice and to make that change, then nothing will change in our financial situations. And then the other thing, accountability. If you find it difficult to do those things that you know you should do, such as curb back on your spending, your unnecessary spending, curb back on your I would say probably some of the engagements that you find yourself in. Have someone that you could be accountable to, somebody who could help you, somebody whom could look out for you and to probably keep you on your toes or keep you in check. If you could work with somebody, whether it be your spouse, whether it be your a relative, or even a co-worker, get somebody whom you can be accountable to, even at the beginning, just so that you could develop that habit if you find it very difficult. And that also could help you in changing the landscape of your finances. Because COVID, we look at COVID as something very negative, that everything it brought with it was bad. But trust me when I tell you, COVID presented so many opportunities whereby we can reassess, readjust, realign our lives so that we can go into 2021, 2022, 2023, and beyond in a much better position than we were back in 2019. It is just for us to take a step back and to reset our minds, reset our thinking, so that we are able to tap in and to make that shift. So securing your financial freedom is in your hands. Mr. Halliday could stay there until tomorrow morning presenting to you, but if you are not prepared to take responsibility and take charge of your finances, then your freedom will not be realized because it is all in your hands. But St. Lucia Workers Credit Union is here and we are ready to help you to realize your financial freedom if you are prepared to do the work. So you could give us a call. If you're not a member, please go onto our website, sluwcu.org. Go onto our website, download a membership form, download an indemnity form, download the online app form. Everything is there for you. Just download everything and come into St. Lucia Workers Credit Union. We have 2 branches. Our head office is on Bourbon Street. That's right next to the library. You could come down there to us, or you could go to our branch at Gablewoods Mall towards the back where I think the old RBC was. We are right there. So you can come and present your documents and we will be happy to bring you aboard and for you to be part of this family. There's a lot in store for you. There's a lot, like Mr. Lewis said, who is our president actually, Peter Lewis. I don't think there's any more I could add to what he said. So my encouragement to you is to come and be a part of this movement, the credit union movement, that you could reap the benefits and you could start realizing your financial freedom from now moving forward. So once again, thank you everybody for being on this evening. Thank you, Mr. Halliday again. Thank you, Ms. Doyle. Thank you for all that you have been doing as you continue to, okay, the screen just went crazy, so it kind of got a little lost here. But everything that you have been doing in moderating. So we just want to say thank you for that. And do join us tomorrow for our 3rd and final part in the 3-part series. And tomorrow's topic is going to be freedom through digitization. We know that the world has just shifted when it comes to digitization. And if you know anybody who is averse to digitization, who is, you know, what you call not digitally inclined, please ask them to come on this call, because we have something that we see at Workers Credit Union: no one left behind, no member left behind, because as we move together. So even as we're moving through this digital age right now, everybody needs to be able to take control and manage their accounts, manage their finances, manage their life through this digitization era. So come and be a part of the last session next, that's tomorrow evening from 7 p.m. Thank you. And once again, God bless, and do continue to keep safe and have yourself a great evening.
Thank you. Good night, everybody.
Thank you. Good night, everyone.
Good night, Mr. Halliday.